Hi there traders, this is Chris from Elite Currency with a new video on the euro dollar and pound dollar. So let's start with the euro dollar. Last week we had a break of the bull flag pattern, chart pattern that we see right here indicated by these magenta lines, and price continued to the upside. On Sunday we were looking at this break here, and we were looking at potential wave 1, 2, 3, this being wave 4, and indeed we getting a bounce to the upside and a continuation of that breakout. Now, for those that looked at my wave analysis perhaps this morning, you were aware that I was looking at another wave 1, 2, 3 like this. Let me show you using colors here. Another wave 1, 2, 3, 4, 5. Right? This morning we were indicating that this could be a wave 4, and we had a fib, if I remember correctly, from here to here on that wave 3, and a pretty good bounce to the 38.2 fib and the 21 EMA, and price continuing higher. So we had two tests of the 21 EMA here and here. For those that don't like waves, I understand, but perhaps you do like chart patterns, perhaps you do like moving averages. So our SWOT method and system and our software is based on these items, right? You don't need to know the wave patterns to still trade these swings. So that's what these moving averages are for, right? We got the bounces at the 21 EMA as price continues, and we got to bounce off 21 EMA on the 4-hour chart here and here. So that's the beauty of, I think, about this system and software. Anyhow, that said, we did get the continuation higher. I do think that price is running into a pretty strong resistance zone. We might be completing a 5-wave pattern. For those that like those types of patterns, that's one factor to think about. But the other is the fact that price is running into a pretty strong horizontal levels right here. We're running into a long-term moving average. We're running into a round level, a quarter level, like 117.50. If you put a fib from the very top to the very bottom, we're running into pretty close to a 38.2 fib. So there are a whole kind of cluster of resistance levels, a confluence of resistance levels, the 21 EMA on a daily chart, a weekly chart, for instance, that long-term moving average on the daily chart, that maybe on their own will not necessarily stop it, but if there's a cluster of them, and there are many of them piled up in one spot, then of course that zone does become stronger, and there is a higher chance that price will respond to that level and could bounce at that spot roughly around 117.75, 117.50, 118. Of course, that zone is not necessarily one level, it's kind of more of a zone that could become a bouncing spot for a reaction to the downside, and there could be maybe, for instance, an ABC correction to retrace this bullish swing. Now, what this bullish swing will be remains to be seen. I'm leaning towards a wave A, this being a wave B, and getting another 5 waves up for wave C. That, I think, personally seems the most likely. And price can go back towards this level. You have a lot of bottoms here, and use that kind of as a inverted head and shoulders pattern, perhaps, for a bounce. Of course, that's a little bit more down, a little bit more in the future, I mean, and that could happen in September, perhaps. So, but for the moment, I think that the most likely that there's a bounce here. Now, if price does break through 118 with a good daily candle close near the high, with the candle close above 118, then there could be even more momentum, even more impulse than I expect now. And there could be an immediate breakout towards the 50 fib. Is possible as well. It's a bounce or break spot. It's a decision zone, and it could go both ways. But I think that the breakout would have to occur on a daily chart, a daily candle, and I would look for a pullback on the lower time frame, like a 1-hour chart. So we need a good daily candle, need a pullback on the hourly chart or 4-hour chart, and a continuation towards that 50 fib. If we see on a 4-hour chart, for instance, some bearish candlestick patterns at the 38, that could indicate a reversal and the start of a corrective pattern, price action pattern, back to that support level I mentioned around 115. All right, let's see, anything else on the hourly chart? Not really. I think that I have nothing to add. Price has been above the 20 EMA for quite a while. There is some divergence between these tops, which aids to the fact that there could be a bearish bounce in this zone. It does look like 5 waves have been completed. So I'm leaning towards a bearish bounce, but you never know. Sometimes momentum can be very strong. Sometimes the news can drive it. So if it does break above 38, there is that chance that it can go to the 50 fib as well. Otherwise, usually speaking, I would expect a bounce here and a three-wave correction. All right, let's move on to the pound dollar, and it is kind of finding its legs to the upside. There are two scenarios possible. I said that depending on how price responds to that 21 EMA is very important to me. So, I discuss maybe sometimes wave patterns with you, but that's really a side note for me. Most important is how price responds to decision zones and how it reacts to moving averages and the angle of the moving averages, the distance between the moving averages, price patterns, chart patterns in general, candlestick patterns, etc. So that's why I was already indicating that the reaction to the 21 EMA is for me important, because if it breaks below the 21 EMA, I thought there was a good chance, typically, when you get a second break below the 21 EMA, this being the first, that if you get the second, typically you will get a bigger breakout. Now you can see price did not break or close below it. You see price was staying in between. All these candle closes were staying in between the high of the 21 EMA and the low of the 21 EMA. You see that? Where did the break happen? Where did the close above or below the 21 EMA happen? Right on this candle, and it was above, right? So that was indication that bearish break was not probable anymore. Price did not manage to go through this trend line either. It did not manage to go below the 20 EMA for the second time. We didn't get that. In fact, we got a break above the 21 EMA. This was, depending on how you count it, it was like here was an attempt to break but not successful. So it could be seen as a first break or a second. We can see that here was an attempt. And we're getting a pretty good continuation to the upside, as indicated that could happen when you get a break above the 21 EMA. So I think that, how do we piece this swing high, swing low? It is looking like we're getting a first correction, a second correction, and perhaps a third correction that maybe can go up to the R2. We can put a fib from here to here, all right, on this swing. And you can see the price bounced at the 50 fib, and typical target could be the -272 target, which is around at 130. 130 is obviously a round level and hence resistance. 130 could also be resistance from this point of view if we put a fib from here to here. And you see that price is, maybe it's difficult to see at this moment. Let me do it like this. There we go. And zoom in just a tad, and there you go. It's a 50 fib as well. So around that 130, -272 target and the 50 fib could be a stopping spot, and it could be a three-wave correction like this. And that could still be a turning spot for potential wave 4. If this was wave 1, this is wave 2, this was wave 3, this could easily still be a wave 4. That would be confirmed if price breaks below this trend line, the support trend line, and the 21 EMA. A break below it would indicate the start of wave 5. If price breaks above the 50 fib, then there could be a bigger trend going on, and there might be more upside. The first target is 131, where there's a -61.8 fib and a 61.8 retracement fib. That's the first target. Of course, that is a relatively small zone for a daily chart. So those 100 pips between 130 and 131 is best rated on a lower time frame, maybe an hourly chart, right? So we would look for a break, a pullback, a break, pullback, and continue like that. If it breaks above the 61.8 fib, then obviously there's more space. And if it gets that far, then you can start thinking about the fact that this could be a 1, 2, 3 pattern. Otherwise, it's most likely to be an ABC for the moment. All right, so I think that at this point, let's dive into lower time frames. It is probably, I wouldn't be surprised if we get a break, and what I would be looking for on this time frame is a bull flag on the hourly chart. I think a bull flag break, maybe the R1 could stop it, for instance. A weekly R1 could be a good level, like 129.50. I wouldn't be surprised to see a flag and then a break up to that 130. And then if you get a new flag or an immediate break and then a flag, there could be again a continuation. So I think triangle patterns or bull flag patterns on the hourly chart could be a good kind of indication that more upside is potentially possible there. If price gets up to this 50 fib, however, and starts to move rapidly to the downside like this, and then shows a bear flag, then we probably see bearish candlestick patterns in the 4-hour chart and daily chart. And if price then breaks through this trend line like this, then a bigger reversal is to the downside is becoming more likely, and it probably means that a bigger ABC correction has been finished. All right, so in that case, we'll see a break below the trend line and the 21 EMA. All right, that's a bit about it for now. More updates, of course, on elitecurrency.com, multiple per day. Wish you all great trading and talk to you soon. Cheers.